essentially, what we want to go through is just sort of what everybody's doing, understanding taking trades, understanding session timings, things of that nature. So what I've done is I have the three, I guess, pairs that I've been watching for the last couple of weeks. And what I want to do is I want to actually go through and talk about visualizing where we're going in the market and why we're going in the market, or why we're doing what we're doing in the market. So let me just pop up everything here. Okay, so let's go first with UJ Daily. This is probably one of the cleanest things that we've seen in a while. I did speak about it, but what I want you to notice is I want you to notice obviously the high and the low, and then obviously the low again. And you can see sort of where I've drawn out support and resistance. And what I've done here is I've basically given myself ranges and the idea of where do we think we're going with certain things, but more importantly, why it's important at the end when you look at where we are currently in the markets. Why is that a key point? And I've sort of highlighted what we've done right now, and this is what I was talking about, and this is what you have to visualize. On the daily, it's a lot easier to see because the candles, there's obviously a lot less. But when you start to dive into the shorter time frames, you start to see the same ideas happening. And the key point here is understanding when those ideas happen. And what I mean by that is how and why do candles do what they do, and what are they actually telling you as you're trading? This is probably one of those things that as you gain confidence and experience in the markets, this is something that you will see and you will be able to understand that's happening right away. The problem becomes when to slow down and when to stop doing what you're doing. So as an example, if we look on, say, the 15-minute actually let's go to the hourly. So the hourly candles, right? So you can clearly see here, so this is obviously from our major areas. Here's your resistance level, and then here's support level. But now what happens is when we get to this point here, we have to be aware and we get hints, okay? So this would have been in the market, and what we're looking at right now is understanding this section here, okay? So for the most part, over the last, say, 2 days, we've really ranged. And what I mean by that is we haven't really moved too much. We've started to move down, but what you're looking at is you start to pick out ideas and start to pick out hints of why things are happening, why things are happening. The reason why they're happening is because this will give you an idea of where we're going and what we're going to do. So in this instance, I've drawn out several circles, but then more importantly, if you just sort of draw a magical trend line, it allows you to visualize the market and allows you to see what's happening. And a lot of people aren't looking holistically at what's been going on with the market. So if we turn around and we start dropping down, you can start to see how we've had this movement. So you ask yourself, if you took positions in this area here, what are we looking to do? Okay, so here's the thing. If we're taking positions over here and we've decided we're taking buys, where is our target? Our target would most likely be this wick fill here, right? We can all agree that if we had momentum, chances are we're going to be filling this area over here. This is part of what you do in terms of visualizing where we believe the market's going. Now, with that being said, we also have this point over here. Okay, so now you're in a crossroads and you say to yourself, okay, well, which way are we going? I don't understand the market. I don't understand direction. So what you're saying to yourself here is you're saying, okay, if we're going to fill this over here, then more than likely we're going to have to break this level here. And if you didn't see, if this was only what you saw on the current charts, you would have to say to yourself, this is the level that we're breaking here. But then you say to yourself, okay, well, where am I placing my stops? My stops are probably going up over here, right? Because the idea is, if we're going to break this level or we're going to break this level, we're completing this area here or we're completing this area here. Okay, so this is where people start saying, well, where do I place my stops? Where do I place, where do I place my trades? Maybe you're placing a buy stop above this level here. Maybe you're placing a sell stop at this level here to allow you to connect and catch that movement. You're not trying to call trades in this area over here. Now, this is an hourly chart, so if we start to now drop into the 15-minute, now we're going to get even more information on these trades. So you can see here, this is your 15-minute chart, similar to what we were looking at before. So right away we have this wick. Oops, let me do this, sorry. This chart's live, so let me just take this away. Yeah, so when you see this wick fill right here, right, you'd say to yourself, okay, we're going to probably fill this wick. But what you also have to understand too is we haven't really shown bullish momentum, right? As we start to pop up, we've dropped down, come up, drop down, started to come up. Once we start here and we don't actually get moving in that direction anymore, this becomes invalid. We don't need to worry about that because you can see clearly here in the 15-minute time frames, we're not anywhere close. So when people trade off their phones and when they go through and they actually look at in terms of where we think direction's going, when you drop into your shorter time frames, it will give you more of a view of execution to be like, okay, if we're actually filling wicks here, do my candles support that, right? At this point, they don't, because you can clearly see here we're struggling. And this is something that you do as you're trading, is you start to understand and you say to yourself, okay, are we going to fill that wick? If not, where are we going? And you can see clearly we were consolidating all the way through and we're not really pushing up or pushing down. So if you were to take a sell over here and dropped over here and you see that this is a support, as long as we don't come back to this level here, chances are your sell is still going to be valid, right? So even if you took a sell over here, as long as we're not coming back up to this level over here, right? Let me just do this a little bit easier. So you have this as your top, and then you take a sell over here. As long as we don't come back to this level over here, we're pretty much going to be okay. So you can see we drop down, come back up. We have a little bit of a top, but then once again, when you look across, we're not really coming up to that level anymore. So, it dips back down, drops back down, dips again. So when you start to watch that, you have to give yourself an anchor candle. I mean, it's not anchor in the terms of, what other people use as, but you give yourself targets. When you visualize the trade, what you're doing and saying to yourself is you're saying, okay, if we reach a certain point, either a high or a low, we have to exit the trade and you have to give up on the trade. And that's okay. A lot of people are upset when they lose a trade and then it goes the other way. That's fine. But the idea, once again, is you're giving yourself enough opportunity to make a decision based on what's happening in the market. And in this case, based on the 15-minute charts, we're not seeing any bullish momentum. And then as you start to go through the daily candles, you start to see that that sort of conforms to that. So as you start to go through the charts, now you can start to see, okay, I still took a trade over here in consolidation. We dropped, came up, dropped up again. You can start to see that we're not really breaking this resistance level. If we look at the higher time frames, we have momentum. So it's just a matter of time before we break. Now, when you turn around and you say, okay, well, when are we going to break? Here's where you start doing your evaluation and you say to yourself, okay, where is the timing of these breaks? Where are we getting these breaks? And then you can start to see where these candles are happening all the time, right? So you can start to see here, we have movement up. Here we have movement down, but it's a lot cleaner than this movement over here at this point, right? We don't have any movement. So now when you start to look at the markets, you start to say to yourself, okay, where are we getting most of the movement? So if we were to take a look at 315, right? So we highlight 315, we can see that there's a lot of movement each of those times, right? So we have movement here, consolidation over here, and then movement again here. So, you know, you can say 2 out of 3 times at this point, we're getting movement. So this is how you start building out your plan. And you say to yourself, you say, okay, fine. We're building out our plan and we're looking through this. This is what you're looking for. And you're saying to yourself, okay, this is what makes sense to me now. So now I'm going to start hunting that. And then you say to yourself, okay, when should I start hunting that? Now you go back a little bit further and you start to look at this section over here. You start to look at this section over here, right? And now you're giving yourself opportunity to catch those moves in a little bit better fashion, because now you're starting to back test and you're starting to notice things that are happening at certain times, and that's going to allow you to make those trades. So now if we turn around and we go to GJ, which I've been studying a lot more and people seem to be enjoying it. So now what we'll do is let's walk through the North American session of GJ, similar to what we did this morning, and we could take a closer look at it. So what I'm going to do is I'm going to drop into the hour. We can see that. And what we'll also do is I'll drop into the 15. So when we first look at the hourly chart, so you can see what we have right away. So we have, this is once again our major resistance. And then you could say this was our support level, right? What I did here is I drew this resistance level in the middle. That's to help for the 15-minute, but you can clearly see we have a downward push. So if you're looking at this range, we should fill that range, and you're looking at basically about, so we're at 155, so you're looking at almost, I would say 880 pips, right? So you have 80 pips in this range. Essentially all you're looking to do is you're looking to grab a percentage of that range. So you can see each hourly candle provides you information. Now, when you start looking at where are we going or what we're doing, let's start looking at areas of importance. Let's start mapping out potential wicks where we believe that either A, we're going to have problems, so when we come across there could be traffic, or B, we want to be filled with momentum. Okay, so this is what you're doing as a trader. You're looking at these pairs and you're saying to yourself, okay, where do I believe we're going to have that momentum and where are those wicks going to be? But more importantly, if I expect, as an example, this to be filled, where is my stop loss at this point here, right? Probably at this level here, looking at this area here, because once again, once we tap up into that level, if we blow past it, we're now moving in this direction. But if we tap it, more than likely it'll probably reject and go back down if we have that momentum. So as you start mapping out your trades, now you say to yourself, okay, I'm coming into the North American session in this area here. How are we looking? What are we looking at? What have we seen all night? And what do I believe is going to happen? So as we start to pull up, now you can start to see, as soon as we get this candle here, we know that more than likely this wick will get filled. The fact that the candle here pulls up a bit is fine, because what are we doing when those candles pull up? Those candles are essentially going through, and if you look on the 15-minute chart, you can see they're all trying to tap up a bit, and they're just sitting there creating a tail. So when you look at what's happening, well, we're at the 5 o'clock hour. You can see right now consolidation. But each of these candles are not breaking this area here or breaking this area here. So what I've done is I've drawn a line, a resistance line, and boxed this in. Okay, so what I've done is I've boxed this in for myself, and what I've said is if we break up here or break down here, this is where we're going. Now, where am I expecting us to move to? So you can clearly see here as we broke out, we had initial break, we came back up. Once again, this is okay. This candle here is okay because we haven't breached these areas here. So this is what you're doing is as you're working through these specifics, you have to look at the market and it has to give you hints. So you have to look at these candles and say to yourself, why is the market doing what it's doing? Where are we in the market when it comes to timing? And then how do we move with those times? So, as we start to come towards the 8 a.m. Eastern time, which is the North American session, you can start to see we're moving and we're starting to break out. So now, like as we go back, so let me see if I can just pop back that way. Give me a second. So as we pop over here, once again, you can start to see. So trades were taken. I took trades this morning in the webinar when I was working with Raquel, and basically you could see we pulled all the way up. So here you go. So if you want to do the risk to reward, so we pulled all the way up to this level here. So 10 pips drawdown. We had 114 pip take profit, and then 20 pip take profit. So at no point was I worried, but more importantly, my risk to reward was already in that. And we were saying, okay, what we're looking to do is we're going to probably fill this wick here, but more importantly, we're going to drop down. Why? Because we have momentum based on the overall movement of the market, looking at the higher time frames. So when you go through these trades and you look at the specific pairs that you're working on, you're going to realize, like for example, the pound JPY will pull back 10 or 12 pips easily, very, very fast. But because it moves that fast, it will also drop that fast. So you have to keep that in mind as well. So, you can't sit there with GJ and say to yourself, I'm only going to get like a 3 pip drawdown and I'm going to get like a 14 pip reward. That's very difficult. But what you can say to yourself is, based on the current market structure, we should be dropping. And based on that drop, this is the risk I'm willing to take with my account to get the reward. So at this point, I'm willing to risk 10, 11, 12 pips, knowing that I'm going to get 14, 15, 20 pip rewards. So my risk to reward is still positive, but I'm risking more pips. So my drawdown based on my account is a little bit more. I'll reduce my lot sizes to adjust for that. But what you're seeing is now, based on the timing of the market, I'm able to take more positions and take those trades. Now, the question remains here is when you look at what's happening as we move further on through the market, right? So, you say, okay, this is your, as we come through 8 o'clock, we pull down, and then you can see here, now we've popped back up, and you look across, providing that this doesn't really break this resistance again, where are we going? We're going back down. How are we looking at that? We're looking at where we are in the market to push back down. Now, as you go further out, once again, and as you go through and you take a look at your higher time frames, you can start to see where we should be popping. But more importantly, you can see here, we filled this wick here. So this wick eventually got filled. So when we get to this level here, and as you zoom out, you start to see, okay, we filled this wick almost to the full wick, but more importantly, where is our next target? Long range, probably this area here, right? So what we're looking to see here, this candle probably will pull up. So we'll create a wick and then drive further down, filling this area here. Why? Because we have momentum, but also at the same time too, look at the way the candles are forming. Like this is huge. This is huge over here. You have your supply area over here. So it just makes sense that we've grabbed liquidity at this point. Like there's been a big pull into this area here to push further down. Now, do we know if that's going to happen for certain? Maybe what we see happening here is we pull up into this direction over here in the new daily, and then we push further down, right? Because you're not going to see, I mean, here as an example, you can see we stopped right at this support area, and then we went further up, but you can see where there's into like a bullish day, a bearish day, a bullish day, a bearish day, bearish day. There's never just bear, 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 bear. There's always a little bit of a exhaustion or a breath in the market, and that's sort of what these happened, right? So we had this huge bearish push, and then we have exhaustion where we need to recoup. Institutions have grabbed their positions, and then we push further down again. Okay, so when you're reviewing your trades and when you're going through, the idea once again is you're saying to yourself, how are these various times affecting my trades? What am I looking for? I'm looking for specific ideas. So here I'm looking for a wick fill, right? We believe that this wick is going to be filled. It eventually did get filled. We got pips out of there. What do we think is going to happen? Eventually we're going to drop down to this level over here based on the fact that this is the first area. So if you turn around and you draw your demand area, you could say, okay, if we continue momentum, this candle over here will eventually get to this point over here, right? You can see we sort of tapped. But once again, if we don't have that momentum, now where are we going? So now you're looking to say, okay, probably up into this area over here, but more importantly, up into this support level here, or sorry, resistance level here. So as this candle forms, if we move into this area, I'd be watching at this point to say, okay, we're going to go further up, or now we're bouncing back further down, and then you're waiting for confirms at that point. The fact that we're heading into the Asian session, not probably going to move too well. We'll see what happens, but more importantly, we're coming to the bulk of the market movement Wednesday and Thursday. So this is where you're going to get the meat and potatoes of your entries and also of your profits. The market's going to move because now we've had, Monday and Tuesday to sort of warm up. Wednesday and Thursday are going to be the prime movements for the market, and that's what you want to take advantage of. So really, this quick webinar was to go through and talk about planning your trades, but more importantly, mapping out what you see on the charts and how to use that information to help you. Because remember, this information can be used on all time frames. You can work through the 1 minute, the 5 minute, the 15 minute, you can do the 4 hour, the 1 hour, you can do the daily. But once again, you have to realize if you're working on the higher time frames or you're swing trading, and if we turn around and we look at swing trades, you could turn around and say to yourself, okay, if I want to swing trade GJ, let's take a look at what I'd be doing is, for the most part, I'd probably jump into my weekly time frame, and now you can see weekly filled this wick. But what do we see right now? We still have bearish movement. So more than likely with this weekly candle, what should we see? Probably continuous bearish movement because we just had a pullback, but we should pull probably to this level over here over the next week or so. So if you looked at this one candle and took an entry right now, probably you'd end up pulling all the way down. But now, where would your stop loss be? Your stop loss would probably be up in this level here. This is where your stop would be, and your take profit would probably be in this area over here. But be aware, once you tap into this area, as soon as you tap into it, it might pull back, right? So now we have to be a little bit more cautious. So what you would say is maybe my take profit point is right over here. So, if we draw that line, which is really poorly drawn, but I'll do this in a second. If you turned around and said, okay, if I'm going to swing GJ and I'm going to look to take trades, I'm going to say, okay, I'm going to take a sell position here. My stop loss is 100 pips up, and then my take profit is basically 110 pips down, right? And as we go further down, you can see you're at like 230 pips, 220 pips, things of that nature as you start to pull through. But you also have to realize this trade could take a long time. We could pop back up and then still continue back down, but you have to be willing to adjust that and say to yourself what makes sense. So yesterday speaking, when you saw this, when we saw this pull up here, we knew more than likely we were going to fill here, but it was just a matter of where is that going to stop? Where are we going to stop at this point with this wick? And as soon as we have that momentum going down, that's when you can start taking your trades and say, okay, chances are we're going to fill this weekly wick here, right? It's the same thing as if you were going to fill the daily wick. If you would if you would say the wick would fill on the 15-minute or the wick would fill on the hourly, you would have the same idea. The same thing would happen. It just takes longer on the higher time frames, but the reward is greater. So you have to determine what makes sense for you, but looking at all these various elements, that should give you some insight into saying, hey, you know, what makes sense for me as a trader? Maybe I just don't want to trade like that. I want to do swing trading. I would look off the higher time frame, and I'd be looking for these types of ideas to say, hey, this is what I'm doing. If I'm taking buys, I'm putting buy stops over here to probably go back up in this direction here. So once again, this trade might take a couple of weeks to progress or to create, but then eventually it gets there. Okay. So with that being said, does anybody have questions? We could talk about some stuff. If people have questions, we can definitely go through that. Questions? No questions? Wow. Oh, there we go. I see the weekly momentum is up, yet the daily 4 hours down. How do I know which to follow? Okay, so that's a good question. Are you? I guess we're referring to this current right now. This is, you're basically, when you're looking at what to follow, I'm looking at this area here. I'm not looking at what's already happened, because I mean, you're really working on just what we believe is happening at this point. So when you look at what we've done here, we've had this pull down. So if we're still pushing in that in bearish momentum, we're going to touch this level here. If you believe we're going bullish, you then have to set pending orders here, because the candles, there's nothing to tell you right now that we're moving bullish. We have to wait for bullish candles to form. That's the most simplistic way to look at it, is if we don't see bullish momentum, it is now bearish. We have to wait for this candle here to turn bullish to say this is, we're going to continue up in that direction. You see it a lot on the shorter time frames where you start to see candles turn, but on the higher time frames it takes a lot longer. So yes, we're moving up in this general direction, but this candle is still pushing further down. So if you take buys over here, you're just going to keep drawing down. So you have to wait for this candle specifically to turn. That's what I mean by waiting for confirmations. So as you wait for confirmations, the higher the time frame, the better the confirmation. All right, could you do a 15-minute breakdown? Sure. Okay, so here, perfect example. Great, we're looking at this right now. So here you have potential for a wick fill, right? So this is your 15-minute frame. So now what we do is we drop into the 5-minute frame. So you can see here, the wick was created by these 5-minute candles. We're still pushing up. We don't have confirmation of a drop yet. When we drop now into the 1 minute, while we start looking, we get a little bit closer. You can see here, this was the wick that stopped us, and then we started to pull up. So all this right now is a wick. This is all a wick on the 15 minutes. So your candle looks like this, right? That's what we see. You can see here, these candles have started to sort of top out. So a resistance level is being built on the 1 minute, but we don't have confirmation. So what you could technically do would be, okay, if I want to plan out my trade, I'm probably going to be looking over here to take sells to drop further down if I want to trade off the 1 minute. If I'm looking at the 5 minute, I'm waiting for this candle here to close, you know, probably bearish, and then I'm waiting for the next candle to start moving, and that will allow us to pull this. And as soon as we start to fill this area over here, more than likely we're filling this area there. And that's what you're doing off your 1 minute, off your 5 minute, and then finally your 15 minute. So basically with your 15-minute frame, as soon as you start, you could probably take a sell stop in this area over here so that as soon as this candle starts to push through, chances are it's going to go all the way in. But once again, you have to remember that you may see this wick here pop up a little bit higher, or you may see this up and then further down. So you have to be aware of that. Just because you enter over in this area here and you take a sell doesn't mean that it's going to go straight down now. You might have this little bit of an arch where this candle pops up a bit, we hit a resistance level here, and then we drop back down. Alternatively, if this candle finishes up just a little bit higher, you may then start to have a drop down. So this is why I say if you're looking for sells, you're looking for a deeper confirmation. And if you were taking this wick fill, what I'd be doing is I'd be looking to take the wick fill in this area here, right? So if we turn around and we look at what that is, just eyeballing it, let's take a look. You're at like four or 5 pips, 4.5 pips. Drop a little bit further down, you've got 7, but you're taking the middle of this range, and that allows you to push to take that. So we can watch this sort of happen, and you can see what we get at this point. I mean, the market obviously is not at the best volume times, but that's sort of the idea of now as we start to go through 5-minute charts, you start to see this candle. 1 minute, the candle will close. Now we jump into the 1-minute frames. You can see that, based on no volume, we're having gaps in the market. So things are just popping down. Now we're getting a little bit more pressure. Jump into the 5-minute, still have no confirm of it's going down. We need a little bit more. So we're hoping to make a tail here and then a drop down. That's what we're looking for with this candle here. We haven't got that yet. So you can see it's starting to try and make that. So it might just push up a bit and then it'll start to push through. As soon as we break this level here, we should be dropping all the way down through that. It's a visualization thing, but it's also something that, if you take a trade right now, you have to be expecting that it possibly could pop up to here again before and create a wick to then push further down. So you have to expect that. So if you're not looking, if you want to be safe, you're taking trades below here or trades below there. That's the idea at that point, where you actually get that momentum that's now shifted. But you can see based on structure that we're dropped and then basically we should drop again, right? That's the idea. But you can see what just happened here. We pop right back up. So this is the reason why obviously you don't trade at 20 after 5, but more importantly, you have to wait for these candles to finish. So if we turn around now, jump into the 1-minute chart, chances are we've popped right up really hard. So there's your pop up. But here now, if we're watching the 1 minute, I'm watching to see that we don't break this level here. So maybe this pops up right to this point here, creates a wick, and then starts to pull back down, and we go down that way. So that's the idea in that respect, is to see how that works. And then once again, you're obviously looking for your wick fill at that point. So we're waiting for this candle now to give you information. But more importantly, now you can start to see, okay, we can start to put a pending order here because now we have sort of a wick at that point where, if we do pop up to this point, it becomes invalid. But if we do push back down, at least then we start to move in that direction. But more importantly, as we come closer to the hour close, maybe we're going to get that momentum in the next 15-minute candle. So that's the idea. They're working through the 1, 5, and 15-minute candles to give you information in that respect. Okay. Okay, I think I answered that question. Any more questions? No more questions? Okay, so this will be in the drive. It'll be there recorded. Let's see. Any issues with the brokerage, just email accounts at the trader's domain. We'll look at that for you. No big deals there. If anyone has questions, obviously reach out to me, not a big deal. I'm always around. I don't want people thinking just because I'm running a brokerage now that I'm not available to you. It's funny, I think it's a little bit of only child syndrome that we're experiencing, that people feel now that all of a sudden I moved on to something else. I haven't left my obligations, and I will never do that. I have a team working on the brokerage, so I don't have to be there 24/7. I'm overseeing a lot of small issues to make sure that things run well, and I will continue to work and mentor like I have been. I may not take another group of students, and this might be it, and we all might just be one big happy family now. But I mean, once again, it's just exactly what it is. So we'll sit back and let things do what they do. All right, have a good day, guys.